Bismillahirrahmanirrahim. Assalamualaikum and very good day. My name is Narjani bin Muhammad and our group shall be presenting on the Islamic equity market in Malaysia. Other members of our group are Wan Muhammad Azhar, Muhammad Arif Mustaqim, Robson Chin, Duratul Maknun, Umi Nur Rahmat, Siti Fairuz, and also Zainuddin Yusuf. The agenda for our presentation are first, the introduction, secondly, the development of Islamic equity market in Malaysia, thirdly, issues in Islamic equity, fourth, the Sharia compliance challenge in Islamic equity markets, and lastly, the role of Sharia screening methodology to avoid Sharia non-compliance risks. The financial system acts as an intermediary between surplus units and deficit units. The units are households, business firms, governments, and foreign investors. A financial system consists of financial institutions, financial markets, financial instruments, financial services, laws and regulations, as well as techniques. All of these function to facilitate the transfer of funds from lenders to borrowers. The functions of financial markets are saving, wealth, liquidity, credit, payment, risk protection, and policy. This is a tool for governments to stabilize the economy. The financial system consists of money market, which are less than 1 year, and capital market, where the instruments are more than 1 year. Examples of money market instruments are commercial papers, treasury bills, certificate of deposits, promissory notes. And examples of capital market instruments are stocks, bonds, mortgages, and government securities. Under the capital market, there are equity market, debt, or in the case of Islamic financial system, a sukuk market. And lastly, there is a hedging market. Under the equity market, there are primary market and secondary market. An Islamic financial system has to be free from interest or riba, uncertainty, gharar, gambling, maisir, prohibited element such as pork, alcohol, or pornography, unethical practices, which are manipulation, known as takluk, hoarding, ihtikar, artificial price hiking, najash, and concealment of defect, tadlis. The development of Islamic equity market in Malaysia can be divided into 3 phases. The first phase was from 1960 to 1990. In 1963, Perbadanan Wang Simpanan Bakal-Bakal Haji or Tabung Haji was established. In 1983, Bank Islam Malaysia Berhad was created. In 1985, Takaful Malaysia Berhad was founded. Phase 2 was from 1990 to year 2000. Notable events in Phase 2 are the first Islamic Unit Trust Fund was created in 1993. Islamic Interbank Money Market introduced in 1994. Islamic Capital Market Department and Sharia Advisory Council were created in 1996. The first Islamic Stock Index was introduced by RHB Unit Trust in 1996. The second Islamic Bank in Malaysia, Bank Muamalat, was established in 1999. Also in the same year, KL Sharia Index was launched. Phase 3 was from year 2000 until 2010. Significant events in Phase 3 are the first global corporate sukuk issued by Guthrie in 2001, Islamic Financial Service Board founded in year 2002, Malaysia International Islamic Finance Center launched in 2006, the first Islamic Real Estate Investment Trust was listed on Bursa Malaysia in 2006, and in 2009, the first Sharia compliant commodity exchange, Bursa Suq Al Sila, was created. In 2010, the Islamic banking and finance industry make up 20% of the overall market. Now I shall pass this presentation to Zainuddin.
Thank you, Nazrul, for the introduction. My name is Zainuddin bin Yusuf. I would like to proceed with the presentation regarding the development of Islamic equity market in Malaysia. The Malaysia government and regulator body realized that they need to develop and regulate the capital market. It started with establishing BIMB security in 1994. The task with the analysis of Sharia principle that can be used to introduce new product and services for the Islamic capital market. It continued in 1996. They established three organizations. The first one is the Islamic Capital Market ICMD, the Malaysia banking and insurance sector, under the jurisdiction of Bank Negara Malaysia, and the capital market is regulated by Security Commission Malaysia. Secondly, Sharia Advisor Council SAC, the same function like the Islamic Capital Market ICMD. And last but not least, they introduced Islamic Index. It is the first Islamic stock index, was launched in May 1996 by RHB Unit Trust Management Berhad. The Dow Jones Islamic Market Index (DJIM) was subsequently launched by Dow Jones and Company. FBM, FTSE Bursa Malaysia Sharia Index replaced KLSI on 22nd January 2007. But before that, in 2006, Malaysia established another organization, which is the Malaysia International Islamic Finance Center, MIFC. It is because Malaysia Financial and Market Regulator have united to promote Malaysia as an important center for international Islamic finance. The Malaysia International Islamic Finance Center, known as MIFC, was established in August 2006 with industry participation. The focus of this center is in areas such as Suku organization, Islamic fund and asset management, and international Islamic banking. Thank you. I would like to pass to next presenter.
The issues in Islamic equities market. So basically, we have identified 6 of the issues related to Islamic equity market. I will explain for the first 3, and then next will be shared by my team member, Umi. So basically, the dissimilarity, first thing is the dissimilarity between the Sharia school of thought. So as the Sharia sensitive investors, sometimes choosing the investment is a significant challenge because of the differences between Sharia school of thoughts and the numerous Sharia screening procedures used by different market data sources. So hence, for their whatever portfolio that to be true Sharia compliant and serve their principle, sometimes these investors who are very sensitive to Sharia must adhere to the trustworthy Sharia screening and implementation methodologies. There are times because of a different Sharia school of thought, and there are sensitive investors as well. In terms of decisions whether to invest and continue into this kind of product, it will be very challenging for some investors. Moving to the second point is actually challenges to produce a true and fair of Islamic financial transaction. Okay, in terms of the principle and structure, Islamic financial products and services are distinct from the traditional financial products and services. A true and fair representation of Islamic financial transition becomes difficult. Therefore, it's because of the complication and the rapid increase of the depth of Islamic capital market activity, it has also created difficulties for a financial institution to produce a more true and fair of this Islamic product due to some of the complication and sophistication of their product and services. Thirdly, the regulatory framework governing Islamic capital market. So an efficient legal, regulatory and supervisory framework offers usually a crucial basis for a contemporary capital markets operation. It is very crucial because this regulatory framework is actually an enabler and is a supportive that to ensure that whatever the transaction in the Islamic capital market or Islamic equity market, it has to be regulated, must have a proper governance, so that the investor will be confident and also convinced to participate into this transaction of the Islamic capital market. Yes, because some of the investors may felt that the regulatory sometimes is applied to the conventional, also maybe applied to Islamic, which can create a little bit of doubtness. Yeah, that's all I have from my end. Thank you.
I'll be presenting about the issues in Islamic equity in continuity of the previous presenter. So the first one will be the investor educations. Okay, so the public has a limited degree of knowledge about and in understanding of the Islamic finance, which eventually prevent them from actively to participate in the equity market. This is due to the conventional market had been exist for very long time compared to the Islamic equity. So the public has less to a limited degree of knowledge, and this is actually another equally crucial factor that needs to take into account. And the next one would be the macroeconomics policy. So the monetary policy formulation and implementation are challenging in the presence of Islamic finance due to the lack of knowledge on the monetary transmission mechanism and the lack of Sharia compliance monetary policy instruments. This lack of tools not only weakens the route through which monetary policy is transmitted, but also causes Islamic banks to store more uncompensated reserves, which reduce their capacity to compete with regular banks. Therefore, it is crucial to expand the sukuk market and provide Sharia compliance products. The next one would be the benchmark. Previously, up to now, it is very common to use the conventional benchmark to compare the market, but this conventional interest-based benchmark has resulted in having a negative impact on the investor to whom they are keen in understanding to comply with the Sharia. So although there are more Islamic indexes being used, the differences between the conventional and Islamic comes from this the tendency of the rates of returns perspective of the people, that it was lesser for the Islamic equity compared to the conventional. Therefore, this benchmark should be more thoroughly analyzed, and more awareness to the public need to be circulated so that the public is aware that the benchmark that is being used will be more positive and will be more useful to the investor.
I'll be presenting the Sharia compliance challenge in Islamic equity markets. The idea of Sharia compliance, which characterizes and differentiates the Islamic financial sector, may also pose a danger to sector survival. The situation may be even worse by the potential for fatwa shopping, when the issuing company can distance itself from ethical counsel and offer less Sharia compliant but more lucrative and low-risk structures. The issue is significantly worse in bond markets, since there are loose Sharia rules and it is possible to employ Sharia consultant on an as-needed basis. A stock must be satisfied the qualitative and quantitative screening requirement in order to be deemed Sharia compliant. So there are 5 challenges of Sharia compliance in Islamic equity market, which are: the first, Sharia requirements and Islamic legal frameworks. Although Islamic banks can theoretically use conventional resolution procedures, framework that specifically handle the difficulties presented by Islamic financing will be needed to be developed. Key policy must be implemented to maintain financial stability, including deposit insurance programs that safeguard depositors of Islamic banks, creation of an emergency liquidity instrument that comply with Sharia and resolution framework that ensure the implementation of prompt corrective action. Second, standardization and harmonization. Although specific standards have been produced by specialist standard steering group, many countries' regulatory and oversight structure have been yet to be adjusted to take into account the industry particularities. In some countries, the practice of Islamic banking has led to complicated financial products and organizational structures in part of as a result. So for the next 3 points, I will pass to my team members, Arif, to present. Thank you.
Okay, now I continue on the third challenges in Islamic equity market, which is in-depth research and find solution on Sharia issues. Based on some research, it explains several factors that may be changes to promote further sukuk development and Sharia approved issuance. It is stated that the firm focus on increasing profit and the increased expenses connected with Islamic financial instrument are the root cause of the Sharia compliance challenge. The fourth challenge is human capital issues. There is a need for highly dedicated and qualified human resources in Islamic equity market. It requires a specific set of competency and skill such as Sharia understanding and market insight. A research carried out by the regulator of the Equity Market Forum found that 82% of the countries which responded experienced shortage of talent in Islamic equity market, and the other 60% of Islamic finance requires further training and skill development. The fifth challenge is public awareness. More detailed instrument-specific information sharing that so that other people may evaluate the firm advisors' decision on an equal footing to guarantee that what could otherwise be referred to as market discipline contribute to the development of an entirely Sharia-compliant Islamic financial industry. Improved education and knowledge on the side of local investors is also required. 64% of non-Muslim respondents cited lack of awareness as the key reason for not subscribing to Islamic financial services. So this is the 5 challenges in Islamic equity market. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. I am Duratul. I will present on the role of Sharia screening methodology to avoid Sharia non-compliance risk. Okay, Sharia financial screening usually designed to weed out business with unacceptably high amounts of conventional debt, liquidity, interest-based investment, and or immoral income. Normally, from Islamic perspective, a firm cannot borrow money based on interest rates, purchase debt-bearing securities, or derive revenue from any other unlawful activity as defined by Sharia. The idea and execution of the Sharia stock screening technique may be best understood by dissecting it into 2 continuum parts or structure and processes. The framework of the Sharia stock screening approach currently in use involves the evaluation of a firm's fundamental business activity, its financial ratios, and the public views of the company. Typically, the assessment section is referred to as the qualitative test, and the test portion is known as the quantitative test. A business must pass both standards in order to qualify as Sharia investable. The quantitative filtering procedure adhere to the established standard of the organization primary business, operations, and financial statistics. So, to get Sharia compliant business, there are 2 Sharia screening methodology where you can see here. There is a qualitative measure, which is business activities, and financial ratios, which is quantitative measures. In order to determine the Sharia status of the listed securities, the Sharia screening used two-tier quantitative methodology that applies a few benchmarks that you can see in the slide. So, therefore, if the security, commercial operation and financial ratio fall below the standard, they will consider as Sharia compliant. I will explain on the business activities, which is qualitative measures. There are two quantitative measures that are involved in this screening method, which is 5% tolerance threshold benchmark and 20% tolerance threshold benchmark. The organization will compute and compare the contribution of Sharia non-compliant operation to group revenue and group profit before taxes using the pertinent business activity benchmark. This 5% tolerance threshold benchmark is applicable to conventional banking, conventional insurance, gambling, liquor, and liquor-related activities, pork and pork-related activities, non-halal food and beverages, tobacco and tobacco-related activities, Sharia non-compliant entertainments, interest income from conventional accounts and instruments, including interest income awarded arising from a court judgment or arbitrator, dividends from Sharia non-compliant investment, and other activities deemed non-compliant according to Sharia principles. Second benchmark is 20% tolerance threshold benchmark, which is applicable in determining the degree of mixed contributions from maslahah, which is public interest, and typically Sharia permissible businesses that may also entail other factors that impact their Sharia status, such as hotel and resort operation. This is where you can see in the hotel and resort operations, some hotel and resort, there are karaoke section, where in the karaoke section they might have provide you call girl or entertainment girls that will entertain the client, which especially the VIP clients. That is not compliance to Sharia, but it's applicable. So this is where you can get the 20% tolerance threshold benchmark. Okay, it also included share trading, stockbroking business, rental income received from Sharia non-compliant activities, and other activities as well. Next, my team, my partner, Wan Muhammad Azhar, will explain on financial ratios. Thank you.
So, thank you, Ratu. And now I will explain the financial ratios, which are also known as a quantitative measures. So, these financial ratios is used to evaluate and measure how a company profitability set as a benchmark in order to separate the money from riba. So, the common benchmarking is a cash over total assets and also debt over total assets. And each ratio that evaluates riba and riba-based component in a company financial condition statement must be less than 33%. So the Sharia screening is also considered as the qualitative component, which encompasses how the public views the company activity in light of Islamic teaching, in addition to the aforementioned the two-tier quantitative criteria. So, as a conclusions, the growth of the Islamic equity market in Malaysia was driven by the well-established infrastructures, deep customer penetration, and also the commencement of the digital Islamic banking. So, there should be a continuous effort in place to ensure the enhancement of the Sharia compliance equity is well balanced with its fast growth. So, the introduction of Sharia screening assessment toolkit for Sharia compliant fundraising activities through equity crowdfunding, also known as ECF, and the peer-to-peer financing program, also known as P2P financial platforms by the Security Commission Malaysia, ST, as well as the cutting-edge technology enabler, for example, like digital banking by the Bursa Malaysia, is among of the latest example of this effort. So those efforts must be ongoing to ensure the Islamic equity market in Malaysia consistently competitive and reputable as one of the most reliable equity. Thank you.
Hi everyone, thank you for your attention. So basically from our presentation regarding Islamic equity market in Malaysia, we decided to come up with two conclusions. The first one is the Sharia Screening Assessment Toolkit for the Unlisted Micro, Small and Medium Enterprise, stand for MSMES, is a guide in screening the Sharia status of micro, small and medium enterprise. Secondly, the toolkit is intended to benefit the ECF and P2P financing platform operators, Sharia advisor, as well as any interested parties. Thank you.